Good morning. Welcome to the XM.com weekly market update. And we're here again with Pete McGuire, the CEO of XM. Pete, welcome back.
Good morning, Andrew.
Well, let's get straight into it. Plenty of data again.
Yes.
Domestically, the Australian retail sales has come out recently. A big drop-off considering all the previous months were pretty good figures.
Yeah, leading up to Christmas, and we all understand that, and it's just tanked. And you don't really have to add much comment to it. The numbers tell the story, and next slide.
Yeah. Well, actually, I looked into the figures, and the bulk of that fall was consumer discretionary, which was department stores, footwear, clothing. So obviously, after Christmas,
credit cards fully maxed.
After Christmas, everyone said, "I'm done."
Yep, haven't got any more horsepower.
Yeah, exactly. RBA interest rate rise today.
Yes.
Now, is it going to be 25 or 50? There's a small school of thought to go hard with the 50, but whether or not, with all the drama around the RBA and the governor in recent times, would he be that bold?
I don't know. I mean, maybe he's got to be, considering I think we went from 6.4 to 7.3 to 7.8 in the last three reads for inflation. I mean, they're massive moves as far as jumps up. So, yeah, I don't know. He's $1 million man, and maybe he's got to spend more time on Bonnie Doon Golf Club.
Well, he's got to get on top of it, that's for sure. So the inflation, that is. So we look at the Aussie. So that's hovering around that sort of 70 cent mark roughly. But the chart gives us a look at the correlation there with the S&P is incredible.
Absolutely, lays it over, and that's where traders, they use these tools and one market against another, and they match that or map that correlation, and that's just a wonderful chart, isn't it?
Yeah. And similarly, we look at the euro, and this is against the S&P as well.
Yes.
The correlation is slightly apart now, but generally they feed one another.
Yeah, they certainly do, and that euro has performed extremely well over the last, say, 3 months against the dollar. It's gone a little bit sideways in the last week, but it's been a one-way traffic since October, as we've seen.
Yeah, certainly has. And once again, we look at Europe. Gas prices, thankfully, came off quite a bit.
Well, hot weather.
Yeah, a warmer winter, which gave probably Europe a bit of a reprieve considering the way the economy was looking.
Well, that's right, from a demand side, and that would have even just spiked inflation further. So it's come in at the right time, and that's just great news.
And the ECB last week put rates up half a basis point, which was to be expected, but they're probably playing a bit of catch up as well.
Yes, they are, and I think that where they roll from here, it's going to be, they've got to try and track down and really hunt down that inflation story. So maybe there's another 50 around the corner as well.
Could be. UK.
Yeah, we've got some numbers coming out this week for the Poms.
And all the stats out of the UK are not great. So we look at real wage growth there, which is pretty horrible.
Yeah, it's a tough, hard, and the old dart.
Certainly is. There's a lot of drama there at the moment with strikes and whatnot. So consumer spending, once again, the figures tell the story.
Yes, they absolutely do. And as you're going to roll into 23, we're going to see continued push down, and it's going to be a tough couple of quarters ahead for the Poms.
You would sort of think so. And they also put interest rates up as well.
Yes, they did.
Which they needed to do. So
pound sitting at 1.2 against the dollar.
Now,
US dollar.
Inflation, we look at all the major economies, which is sort of interesting, which feeds into the story that the higher interest rates are starting to take effect. So we look at all the major economies, bar Australia at the moment, but the inflation rates, they're still high, there's no doubt about that, but they are coming off quite a bit. So it'll be interesting to see how that plays out the next couple of months.
Well, yeah, and I mean, when you're looking at that, we just spoke about the United Kingdom, that's in green, it's the top one. And then you're looking as far as Eurozone blue. Well, that's just underneath it. So they've both given it a 50 jolt last week. Though they've had kinder weather and you've had cheaper energy costs. And energy costs have been cratered in the last week. So if that can continue with cheaper costs, then that's going to be an assistance to drag inflation back.
Yeah. And we've got the US inflation numbers are out next week as well. So it'll be interesting to see where that goes, because that's clearly been coming off. So
yes.
Now, non-farm payrolls last week.
185,000 was consensus. I never tip it. I never put my hat in the ring. People ask, oh, what do you reckon? And no one knows. And that was a classic. Yeah, the biggest banks in the world say 185,000 and delivered 517. You're only at 200%. So, they can't pick a winner.
No, and it's sort of interesting. You're hearing about a lot of layoffs over there as well.
Yes.
So once again,
The tech sector.
We know labour it's a bit of a lagging indicator and whatnot, but still there's no denying it's a big number.
Yeah, absolutely. Oh, it's a very strong number. It's and considering where you're at, as far as we're back to 1969 unemployment record, so it's 53 years, and remembering at that time you were deep in war with Vietnam, so everyone had a job that wanted a job, and it's just the consideration. 517, if it can continue and have a nice little clip along for the next month, then that could be a good sign. You've seen, I mean, it flatlined, it went was mean over that summer period, that good month in July, but then after that it just dipped out, but we've had a very strong move.
Yeah, it certainly has. So, and finally, just a chart on the shipping. So that's the Baltic Index chart at the top. So it peaked around sort of mid-2021, plateaued a bit, and then it's come off significantly. But interestingly, it's pretty much back to pre-pandemic levels.
Yes, very much so. So all that supply chain and the cost of goods being transferred across the world. So yeah, it's taken a big hit.
Yeah.
Everyone's shorted the Baltic Dry Freight Index, and they've done well. And it's a good benchmark or barometer as far as economic growth globally.
Yeah, and those other charts there are coming out of China, North America and Northern Europe. So they're all effectively telling the same story. But
yes, they are.
As you say, hopefully the bulk of those supply chain issues are now behind us, because it certainly caused a lot of problems. So.
They certainly did, and where that moves as far as, economic growth globally, IMF numbers, and, you look at global GDP, that landscape and where they're looking forward over the next, say, 3 quarters. So it's going to be a fun time as we lead up into Christmas.
Yeah, well, and the IMF actually have come out recently. They're sort of like
erring to the upside.
Yeah, it's nothing sort of out of control by any means, but they are sort of saying is the worst behind us type thing.
Yes.
So, these predictions never typically are spot on, but it's interesting commentary that they're...
Yeah, their sentiment.
Yeah, certainly.
Yeah, we're reading into that, and the trader certainly is. I mean, what we're seeing, that one thing, that US dollar index, after we got that number that dropped on Friday, it went absolutely parabolic to the upside. Currencies got crushed. Gold came off massively. Energy got crushed. And that Friday session in US, so Saturday in Australia, that midnight to say 8 a.m. was dynamic. I caught it at about 3 a.m. and the screens were electric, the movement.
Well, when you get a number like that, which is completely sort of
against consensus,
unexpected, it certainly creates the volatility.
Yeah.
Anyway, but as you said earlier, there's plenty of data coming out sort of later in the week as well.
Yeah.
So we'll keep
Good
an eye
week
on
for
that.
Data.
It certainly is. So we'll keep an eye on that, and obviously the big number next week in the US, which we'll be able to touch on then. But thanks again.
Good to see you, Andrew.
Catch up next week.
Look forward to it.
Thanks, Pete.
Thank you.
And that's the xm.com weekly market update.